Hey, it's Mack with PriceActionTradingSystem.com, and it's Monday. It's September the 29th. This will be our chart lesson for today. And I see a couple of different things here. It was mostly uphill today. We went into a little bit, it kind of flattened out. We had a little bit of correction from about 10 to looks like it ended a little bit after 1 o'clock, and then we started higher again. Um, this is what I played most of the early morning was this tighter channel here that's inside the larger channel. When I posted the midday chart, I didn't have the larger channel on there because there really wasn't much to confirm it until we bounced right here. Um, it was something to be looking for, and I meant to put that on the midday chart, but I didn't, and I was kind of in a rush to get it out there because it came so late. I really wasn't even going to do one today, but I decided to go ahead and put it out there. So all I had on there at that time was the shorter term one, um, and we were just kind of getting the break of it at that point. So um, I really thought that we would get a move to a new high a little quicker than we did, but all the same, we still got the new high, and and it worked the same on either channel, no matter how you were playing it. Even if you were playing the bigger one, we still got the break and the new high. So it worked out both ways. You got the break here. You had a bigger correction, but until we got this bigger correction, I wasn't too keen on this bigger channel. But when we bounced right there, if you draw that right off those couple of swings, really just using those first few closes there, and then you drag it up, it fits perfectly on the upside as well. So I feel pretty confident. You can see that prices were working off that midline as well, and it came into play a couple of times in the afternoon. It turned right off of it. So I feel pretty confident that it was, that it is valid. And so no matter how you played it, the only thing that gets tricky is when you get one like this and it's correcting so much because you're not really looking for shorts until you get that new high. But one thing you can't do is go long too early or try to guess at it. It's best to wait until you got a trend moving to the upper side where you get a trap or something, and then try to go long. And that kind of helps. So just keep that in mind. So I circled this one in green. We'll talk about it when we get there. But when we went right through the EMA and got way down here, and you come back, I think that's too bearish to go long on a first entry right there. So you got to wait. In your second entry, you pretty much get almost two measured legs. But again, I think it's too risky. So you wait on this one. And even then, I just think it's a little risky. But we'll talk about all that when we get there. Let's back up a little bit and talk about some trades. The first trade I saw was this second entry um, short right here. Notice the new low, first entry, pullback, second entry. This was the first real close outside the trend line. So you're looking for a new low, and this thing just takes off. You don't know that it's going to do that. And that's not a beautiful setup bar right there. Uh, but even if you waited on this one, the only problem with waiting on this one is that you're so close to that low that when you get the new low, it may bounce. So I went back and forth about whether or not to make this one green. But notice you got a little double top right here. Notice we corrected, we went lower, we came back and corrected again, we made a double top. We went down, we came back and we made a lower high. So that's like a double retest almost of that level. So it's like it's a trap really to the upside. And so I really liked it to the downside for that reason. And so I kept it red. Again, you don't know this is going to take off like this, but you never know exactly what prices are going to do. We just know we're going to get a scalp out of this, but we get a whole lot more in a scalp if you're using runners. So, and then you get another second entry short right here. I wouldn't go. Let me make this a little bit bigger. It's a little hard to see there. I wouldn't want to go short below that doji right there. I mean that's almost not a doji because look how close it closed on its low. So it's even though it looks like a doji, when it broke lower right here, what I would do is use a limit order, or you might have waited for it to go lower here and then drop a limit order back here, and you would have gotten filled on this bar way back here, and you might have even gotten shaken out of this one. But it is a second entry short. It is almost a repeat pattern of this. Notice that high, you get the double top, you test it again. So there were some reasons I liked it and didn't want to make it red. for that reason. But you had to notice this yesterday's or Friday's low or whatever right across there. That was the low of the day from the previous day. And but we kind of went through that the first time and pulled back, and so you're looking for a new low off of this low right here, and we got it by a tick, and then it reversed. And that's what you expect to see. Sometimes you might get another leg down, but that is really bearish right there. And after a break and a new low, I don't know if you're going to get another one that strong or not, and you can see you don't, and it kind of reverses. You get a failed second entry short. Notice the new low here. You're pulling back first entry, pull back. You don't want to be going short up here. Not after the new low, the break, the new low, more than one leg to a new low. Look how that reversed and went. There's no real, you got a little bit of resistance with those bars, but everything's still closing bullish. You're back above. So don't take that short. Just wait and see if you get a trap. And if you don't get a trap and it goes lower, so what? You missed a trade, but you didn't risk getting short on what looks like a reverse. This is what reversal patterns look like. They reverse, they go right through the EMA, and they pull back and test it once or twice, and they go higher. And so I like that one to the upside. Quick, rather easy scalp, and then it sells off again, and it bounces. And again, you get another second entry long right here. I don't like this bar. It actually went lower and went out the top on my chart. That triggered the second entry, but I didn't like that bar. So when this one closed, I liked waiting on it to break above it and using a limit order, or maybe even a stop. But you would have gotten filled on a limit order, a tick back into this bar. You can see right there, it went higher. And I think you could have actually gotten filled right at the top on even this bar. And then you get a failed second entry short again. Notice the new low. That's a little bit lower than that one. First entry, pull back, second entry fails and goes higher. So I like that for a long. And it was really tempting to go long on both of these. But I just think it's too much overlap right there. It turns out to be a good trade. It's like a double breakout pullback long. So, it probably should be green because there's some people that are going to see that low right here. And, it's a double bottom, so you can count that as a new low. First entry short, pullback, second entry short. So it is somewhat of a trap. It turned out to be a good trade. But I didn't trust it right into that. Notice that yellow line. That was the open from Friday's trading day. And look at it, it's acting as support. Then now it's acting as resistance. And then when it before it went higher, it acted as support again. And that's what you want to see. You want to see it acting as support. It's not a really good setup bar, but all the same, if you saw it and took it, then that's great. Then you get a little correction here. You get a close, a new low, a reversal. But I don't like that big long bar going. So wait, and you do get a pullback and another chance to enter. Quick, easy trade. And then you get another two-legged pullback. Again, I don't like that for your signal bar. You got to wait on this one. Just put your stop right there. Actually, it closed and opened, but you could have used a limit or even a tick back in that bar. And then it pulls back and gives you a second entry long right there. I don't like this one as much because you got three overlapping bars, a doji. That's what a doji closes in the middle. This one is almost doji looking. It doesn't quite close on its high. It's so close to that high, there's a good chance it ticks up and then pulls back and traps you. So it's a second entry long counting off these lows. So if you took it, it's a little bit aggressive, but it turned out to be a good trade. And then same thing here. You're working back. You get what looks like a close outside. It's so close, and you could have drawn this a little bit different too, maybe. It might have been a little flatter. I like the way I've got it drawn there, to be honest. That's your first close, but you don't get a new low, so I didn't like going long in there. And there is a second entry long right there, but it's not back to the trend line. You haven't had a break of this little channel, so there's too many reasons not to go long right there. Even though it's a second entry, it's not a good setup. You got to wait on that break and a new low, and we just don't get it there. If you went long there, it would have worked. But again, I don't like going long there because it's not a very good setup. And you see, it doesn't go very far before it reverses and just sails off like crazy. And then there's a possible short right here. I don't think I would go long right there. Definitely, you wouldn't go long right there. It is a measured move down. It is somewhat of a bullish bar, but it's really just an inside bar, and it doesn't fill that little gap on that bar. That's really all that pullback was to fill that gap, and then it goes lower. So I like that for an aggressive short, thinking that, hey, we probably got a bigger channel here, and we may be coming back down to this line. And that's a nice bearish bar right there too. So I liked it to the short side on a more aggressive trade. It's only a first entry again though. So it's a little bit aggressive. We weren't back to the EMA. We didn't really come back and kiss the midline or anything. It just sold off. But this thing was pretty bearish by the time this hit. So and then it bounces right off this possible trend line. But there's not a very good setup until the bigger green bullish bar, but it's awfully big to be going long there. It'll probably pull back. So I liked waiting on this one and then going long there. But even then, if it would have broke higher, I had my stop there, but it never would break higher. And so I didn't like it as much. You could have still taken it, but it's really aggressive because everything's still under the EMA, and you don't know for sure that it won't get through this. But when it tries it the second time and fails and goes higher, you just got to go long then. Because now you've got the new low and two failed moves lower. This is not really a failed second entry because it's successful here, but I don't think you can take a second entry there for sure. If you did, it worked, but I just don't think you can take one because if you use these closes right here, you got a little trend working up. And in the end, it might have been a little bit steeper than what I originally had it drawn. Let's just take that off and start over. Thinking it's more like this right here. You can see it fits pretty good, and you get your break, you move to a new high, and then it sells off. And actually this one I meant to make it green as well. And I'll explain that in just a second. But you're getting your trap right here, and then you got this double top. You barely break above it, pull back. So it's like a breakout pullback long, and there's not a whole lot of room before you get to that midline. But you're probably thinking it's going to test this, and so if you took that, it's a little bit aggressive. It would have worked, and then it sails off again, and it comes down here and bounces. There's a first entry right here, and this is a nice bullish bar off of the, bouncing off this trend line. So this was really, really tempting. It is a second entry long. Notice that new high, pull back, first entry, pull back. So it's really tempting. So if you did go long there and it turned and went down, you got to exit right there. Because you're probably, what I'm looking at is I'm thinking we're probably going to get at least a move similar to that. And you see that puts it on down there a little bit, but it actually went another point or so lower. So there's a good chance you're going to get a measured move like this one over here before it bounces. Measure that one and bring it over. And you can see that's really that is what we got exactly to the tick. It looks like, yeah, exactly. And maybe one more tick. So that's really close to a perfect measured move, and then it reverses. So you got to always keep that in mind. So if you went long right there, that's not a short right there. I don't think you want to go short, other than there is a trap, but I didn't like it even going short. I just think that if you went long there, you got to exit that thing. And I don't see any reason to reverse there. You just get yourself double whip sawed and then have two losers. But you get a new low here after almost a measured move. Notice the first entry short, pull back second entry short, it fails, and reverses and goes up. I like going long there, and there's no reason to go short right there. you got a trend line working up. I don't have it on here, but there's a trend working up through here. You can see it, and it's probably even a little, might even be a little flatter than that because that catches it up here too, as you can see. Um, but this almost looks like a spike in channel. You can see that little trend line working right up through there. But anyway, I don't like it for a short right there, but I do like it once it trapped everybody to go long, because you're looking for this thing to go higher and make a new high, and that's exactly what it does. And that was the last trade I marked. That was around just right at 2 o'clock. And so there's some other setups up through here, but I think it's getting too late in the day. So that's what I saw today. Um, Not much else you can say about this day other than, and there's actually a little trend line working down through here. Once this one started going lower again, I would draw my trend line. And that's another reason too to not like that to the long side, because look at that little channel. That's obvious little channel. You get a break and a move. You actually get 2 legs to a new low, and they're pretty much, there's one leg, little correction, the next leg, and then it reverses. So you got to draw those short-term trend lines sometimes to get the right feel for what's going on your chart. But I think that's about it for today. So hope you had a good trading day. Hopefully we'll get some good movement this week. We'll see. Um, this was more typical. Most of the big movement was in the early morning, and then it just kind of flattened out after that. And then we rallied a little bit to a new high, and we end up closing. We still closed up for the day, but we took a little bit of it back before the end of the day. Here was the. Actually, I'll take that back. I guess we closed down for the day, because here's today's open, and that was yesterday's. So, yeah, so this is where it opened in the overnight. So we really still closed up if you're looking from the previous day's close, because that's the previous day's close. But we closed in what I would say is probably midway between that and today's open. So there was a gap here. And that's another thing to think about, is a lot of times when you open here, and this is where, actually this was the open from the previous day, so I may be confusing you here. Where is the low from? Here's the close from the previous day. So we opened there, traded down. So yeah, we actually closed down today. I'm sorry, I'm confusing myself with all these lines on here. But this little the thin lines are the previous day's open, closes, highs, and all that. So that's where we closed the previous day. You can see right there, and we opened a little bit lower than that, and we traded down, and then we reversed. So even closing right here, we closed lower than the previous day, so this was a down day. Not by much, 6 points or something, but it's definitely a down day. Even though we rallied most of the day, this was still a down day looking at the previous day's close. So sorry if a little bit confusing there, but hopefully that makes sense now. All right, well, that's about it. I'm going to wrap it up. Just remember that these previous days, open, highs, lows, and closes, are really important areas, and you can see the previous day's open was right here, and notice how it kind of acted as support and resistance. Notice where we reversed the low from the previous day, which was right across here, and you can see it picks up right there, and that's where we bounced, and that's where we actually bounced the previous on Friday. That was pretty close to the low from the day before that, right in there. And so these areas become really important, and so that's the reason I've started putting these on the chart, because if I don't put them on there, a lot of times I forget to talk about them. And so notice where we reversed the close from the previous day right there. We opened lower, traded up to it, and reversed. So they're important areas, so keep up with them, be aware of them, don't trade them blindly. But if you get a reversal off of them, that could be a good sign that you might want to consider. So But anyway, I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.